Ladies and gentlemen, please join us here in the room. From the coffee break there, I can see people still having coffee and the chat, which is great, but to keep time, we have to continue. And I would also invite some people maybe who are standing, you can also take seats in the first rows as well, because then it's much more cozy and you get a better overview. So, it's time to move to the second panel, Preparedness and Resilience. In the morning keynote speeches and the fireside chat, we touched upon those topics already, and I really liked the idea that we have to stand on our own feet when it comes to payments in Europe. But to go into the details with that, let's start with the panel. And this panel will be moderated by Gert Auväärt. He's the Deputy Director General of the Estonian Information System Authority and the head of the Cybersecurity Center. Please join us on stage. And as panelists, I would like to first invite on the stage the CEO of Finance Latvia and a member of the European Banking Federation's Executive Committee, Uldis Cērps. Second, from Latvia's Banka, a council member and Latvia's representative on the Single Resolution Board, Ilze Posuma. Third, from Lietuvos Bankas, the director of Market Infrastructure Department, and actually in a few days, a new board member of Lietuvos Bankas, Evaldas Ruzgys. And the last panelist from Eesti Pank, the Deputy Governor responsible of digital euro and crisis preparedness of vital payment services and cash circulation in Estonia, Veiko Tali.
Ladies and gentlemen, distinguished panelists, it's a pleasure to be here. As said, my name is Gert Auväärt. I'm the director of the National Cybersecurity Center of Estonia. And in my line of work, our main focus is on security and resilience of a society. And we see more and more that these values, this democracy, this way of life that we are all used to is being challenged. This is not something that can be taken for granted, and we need to focus on these issues. Today's panel is called Preparedness and Resilience, and as said, we have distinguished panelists to delve into these matters. European security environment has become increasingly complex and unpredictable in recent years. And today here we will explore how payment systems and financial infrastructures are prepared to face these challenges. You have heard the developments in the morning panels, in the keynotes, and will continue throughout the day. We will try to keep the focus on the word resilience and see what can actually be done to safeguard our existing way of life. The European Union's security environment has sharply deteriorated. The Russian full-blown aggression and war in Ukraine has brought cyber and hybrid attacks against critical infrastructure, something that was agreed in the UN years ago in 2013, 2015 by the UN group of governmental experts, that this is a norm of responsible behavior in cyberspace. And one of the norms read specifically that one nation state does not attack the critical infra of another. Well, guess what, ladies and gentlemen? This is the exact first thing in an actual conflict that is attacked, and financial sector, of course, being part of this critical infra. A major electricity blackout in the Iberian Peninsula disrupted payments and cash withdrawals across Spain and Portugal. At the same time, Europe's reliance on non-European providers has exposed vulnerabilities, particularly in card payments, where in 13 euro area countries, no alternative to the global card schemes exists. Former Finnish President Sauli Niinistö has called on Europe to strengthen its financial market infrastructure and develop legislation that ensures readiness for any crisis while safeguarding citizens' sense of security. And this session here will explore how both the public and private sectors are addressing threats and how the digital euro could reinforce the resilience of Europe's payment systems. Discussion will emphasize its potential role and opportunities in national crisis preparedness and in ensuring the continuity of digital payments at member state level without reverting to cash in times of disruption. This panel will focus on key threats, including cybersecurity risks and their impact on payment resilience, financial stability, and also the ability of payment service providers to continue digital payments during severe operational disruptions. We will also cover initiatives by Baltic national central banks to safeguard smooth functioning of payments, efforts by providers to strengthen contingency measures and potential offline solutions, as well as expectations for digital euro from crisis management perspective at member state level. We have with us responsible representatives from Baltic central banks and representative of the Latvian Banking Association to share their views, experiences and plans for enhancing resilience. I will not go into the introduction of the distinguished panelists, as you have already read this when coming here, and Rainer gave a brief intro on this, but rather I would start with the substance of the matter, given that me and my colleagues are the only thing standing between you and lunch. So I will start with Uldis to my right, and the question to you to ponder upon is here. Imagine the situation in Spain and Portugal, where a power outage left customers unable to access their bank deposits and merchants unable to accept payments. How are banks and private payment rails preparing for such scenarios, and what alternatives can they offer to keep payments running? What key priorities guide your contingency and risk mitigation efforts, and what expectations should we place on banks and the public sector in such force majeure situations? Uldis, please.
Well, thank you, Gert, for an excellent question. I also want to thank the Governor of Bank of Estonia for inviting me here, and to the two central banks for organizing this excellent event. I would like to talk about three specific things in the context of your question, Gert. The first one is importance of clear and timely communication. The second is the importance of training and preparedness. And the third is importance of having the contingency arrangements and resilience ideas applied to existing payment methods and instruments. So let me tell you, by using Latvia as a case study, what is being done and what perhaps could be done in the future. So when we begin with communication, it's very important that people, especially in our part of Europe, know exactly what to do in case of a conflict. And we have published a number of brochures, how to act in time of a crisis, even a brochure on how to act in time of a war. People know that one of the critical obligations is to keep cash equal to about 1 week's consumption at home. So that's maybe question number one. Let's still not forget about cash. And also, let's communicate proactively about those type of things. I've heard from many areas, including from my own ex-banking supervisors 10 years ago when we discussed European stress tests. There were many people who were not particularly happy about publishing stress test results because they thought that that would only scare people. And paradoxically, I hear many of the same arguments now about communication, about how to act in crisis. If we communicate more about how to act in war or crisis, we would somehow, make people more concerned and perhaps even, trigger events which we don't want to trigger. And in my view, nothing can be further from truth. Proactive communication in times of peace, in normal times, on how to act in times of conflict, disasters, disruptions, wars, incidents is extremely important. This is exactly when you should communicate about those things. My second point is about having the resilience idea in existing means of payments. And here again, if we take Latvia as a case study, we have been working very closely with two non-European card networks in actually building in the resilience function in the payment schemes, enabling offline payments at points of critical infrastructure, so that when a crisis comes, every person can spend up to 200 euros with his or her card at any of those critical infrastructure points. And of course, buying things like pharmacy, food, petrol. I think we have reached now a point where the voluntary participation in such schemes has reached its natural limit, where we might need to have more hard legal powers to actually tell people, you are a part of critical infrastructure, you will have to prepare your systems, because of course this is not free of charge. But such functionality, I must emphasize, already exists today. Maybe we need more transparency about which infrastructure already is covered and which is not, and that is something that we could potentially consider. The third is again, a specific lesson learned from about the importance of training and preparedness, especially about the service staff working with customer-facing functions at those critical service providers, like at petrol stations, like at food stores. When the crisis comes, they need to understand exactly how offline payments function, exactly what they need to do. They need to understand that actually to execute offline payments with the current technology and setup, you need to insert card in a machine. If you don't do that, offline payments won't work. And this is exactly what we've learned from some other incidents in some other countries, that customer-facing staff did not know how to use offline functionality, even if the offline functionality existed. So training, preparedness, drills are very useful. Also, in order to raise awareness, maybe we should have a payments-free day where people will only be required to meet their daily needs with cash and see how it works, and see what kind of changes to their habits might be necessary, because that moment could actually come. So those would be my kind of 3 reflections about the building in contingency arrangements and thinking in the existing payment methods, about the importance of proactive communication, especially in normal times, and also about the importance of training and drills.
Thank you, Uldis. Excellent. I already have a few follow-up questions, but I'm going to hold on to them and come back to them later. Let me first now turn to Ilze, and my question to you is, what is the status quo of crisis preparedness for maintaining digital payments and cash circulation at member state level, and priorities within the Eurosystem's retail payment strategy? Given our highly digitalized society, is it realistic to expect that we could revert to cash if banks were to go completely offline? Ilze, please.
Thank you, and thank you for having me here on this panel as well. And just to take over from Uldis, and so when we look at the European level today, and also from the previous speakers, we can kind of see that the 2 pillars of preparedness for payments in time of crisis are cash and resilience of digital systems. And at European level, I think we have made quite a significant progress, like Eurosystem's retail payment strategy has placed resilience at the heart of its agenda. Digital Operational Resilience Act, DORA, that became applicable in January of this year and requires banks, payment providers, and even their IT suppliers to follow strict standards of incident management, testing, recovery. Together with NIS2 directive on cybersecurity, I think it creates stronger foundation. Another important step is the instant payments regulation, which has already been mentioned several times today as well. On the cash side, European Central Bank and the European Commission have both underlined cash as a strategic fallback. Regulation is currently prepared to guarantee access and acceptance of euro cash throughout the Union, and the ECB has even encouraged households, and that also at national level, central banks or other institutions to keep some cash at hand as emergency reserve. But at the same time, at the member state level, however, we still see different approaches and rather fragmented approaches. And so continuing the story of Latvia, then we have also we have worked on those issues for already more than a decade. And of course, 2022 was also a year when we reviewed the framework of the critical financial services taking into account the new realm, new risks and new situation. And we as a Central Bank of Latvia, we updated the list of critical financial services. So basically our priorities are access to funds and continuity of payments during crisis situations, which both of which are fundamental as it directly affects people's society's survival, trust in institutions, and economic continuity. And so we look at both cash side and non-digital payment side. From the digital payment side, one solution is offline card payments, already mentioned by Uldis, and the other side is credit transfers, which we as a Central Bank of Latvia, we develop and maintain our own clearing system, which is kind of puts us in a very good position nationally, because we can create our own solutions quite quickly and prioritize our priorities. So this is there are some fallback solutions created for credit transfers throughout Latvian payment environment as well. So as regards cash, then it is no surprise, it has been already mentioned today for several times as well, that the overall share of cash payments decreases in Latvia as well, and currently it's around 22% according to weekly statistics. But cash is still the most used payment method at point of sales. It's around 45%. And what we've done regarding to ensure that cash is available to public, so we have created regulation for the ATM network, which needs to be maintained by large banks like universal banks. Those currently are 4 banks in Latvia for normal everyday situation, and with this currently across the whole country 99% of citizens can reach ATM no further than 20 kilometers. So this is the rule for everyday network. And for severe crisis situation, we have identified that we have identified critical ATMs network, and it accounts for approximately 10% of all ATMs in the country. And the map of those ATMs, we also consider, I fully agree with what was previously said on communication with the public. The map of critical ATMs is publicly available on the webpage of the Central Bank. And so there are what critical ATMs means is that those are ATMs that will be prioritized in emergencies, providing cash availability. So meaning that if for any reason the capacity to replenish ATMs with cash decreases, then critical ATMs will be refilled on a priority basis. Also, there are 2 specific obligations to ensure, firstly, to ensure solutions for continuous connection to information system, and secondly, uninterrupted power supply for the critical ATM network, so they are made more prepared and resilient for crisis situation. And yeah, so this is as I said, our approach is dual track. On one hand, we preserve cash as a universal fallback, guaranteeing that it remains available, accessible, and accepted. And on the other hand, we are also working on the fallback solutions for digital payments. As regards your last sentence, whether it is realistic to revert back to cash if the banks go offline completely. Of course, cash is a uniquely resilient means of payment, and the Eurosystem is actively preserving it for crisis, but full immediate reversion across a highly digitalized economy in I don't think it is very realistic. So my short answer, I see that my time is running out as well, so my short answer would be that cash would help to bridge the gap, but a full reversion is not realistic, so only partially for essentials and at least initially. So thank you.
Coming from a very digital nation, thank you very much for the end of that answer. But I will now turn on to Veiko, and let's turn to the digital euro and its narrative in Estonia. Does the legislative proposal for the digital euro sufficiently embed preparedness by design and ensure resilience at the European level, while also providing opportunities to develop national backup solutions to maintain digital payments? What should be the key priorities?
Thank you, Gert. Basically, I think I have to come back and tell our own story about digital euro. That when this project was initiated, something like more than 5 years ago, we were a little bit skeptical, let's say, about this project, about retail CBDC, and we rather even preferred to go forward, for example, with wholesale CBDC project, which we considered more, let's say, clear value added and let's say more fulfilling our expectations. But then this Russian war happened, and Ukraine happened, and we more and more started to understand that the importance of security in general and resilience of payment systems, how important all these issues are in our, let's say, turbulent world. And in addition of this, let's say, if we're looking at what has happened during this year, then we also more and more understand that the concept of European strategic autonomy is just not a pure political concept, but this is something which is have a real meaning, and which is important to keep in mind when we are speaking about vital critical infrastructure, which payment systems and retail payment systems are. And starting after that, we are turned, let's say, into this direction that you asked about narrative in Estonia, narrative in our central bank. Possibly the main expectations and the main reason, let's say, we are expecting digital euro is that we see additional, let's say, improvement in quality of resilience of retail payment systems. This is the main narrative, let's say, here. And when we are speaking about resilience, it's also important to understand that it's very wide, let's say. It starts from with some technical problems with IT systems in the banks or with connections, or it can be also, let's say, cyber attacks or hybrid attacks, or even the situation of war, let's say. This is important to understand when we're speaking about resilience, that how we can survive, how we can, let's say, provide critical vital services during all these cases. And now turning to the regulation and digital euro, why It was already discussed during the first and second sessions a lot about this resilience, but maybe I will repeat in certain extent that why digital euro is providing additional resilience from our point of view, let's say. No, first of all, it's pan-European public payments infrastructure. This is already important, let's say, and this is legal tender. It's a legal tender. And this is already means that it's not comparable with other payment systems, existing payment systems, which are now in use. Secondly, which I think what was also mentioned by here during first, it's extremely important which this functionality of switching. Switching using digital app or emergency switching, which is already in the legislative proposals included. That basically, if you already have digital euro, you have service provider, but you can switch easily from one provider to other, and this is very important in case of the interruptions or disruptions of the services. And third, which was also mentioned already several times, which is clearly new quality from point of view of resilience, is offline, universal offline, let's say, possibility and functionality. In circulation, not just, let's say, like we have now, like in Latvia, we have also in Estonia that this card payments up to certain, let's say, ceiling can be used, offline payments in critical vital services provided places. But finally, then the question is that what is still our expectations that in addition to these already three very important, let's say, components, functionalities, we are already in regulation. We need also regulations in regulation possibilities for the national member states in emergency situations, in extraordinary situations, to have these backup solutions. This is something which is still under discussion in the council working group, but which should be included, which gives member states opportunity in cases where the other measures are not effective to, let's say, have flexibility of using, let's say, designated providers, for example, or, let's say, having also flexibility what concerns limits and temporary. This is something which is we are expecting that also will be discussed during the regulatory when this process will take place in working groups and on the council level and later on also in trialogues. This is something which I want to emphasize, but yeah, these are. But the key priority is finally to agree and to pass the regulation. This is a key priority. And all these questions which have discussed, it's possible to solve. We already have, let's say, compromise agreements already concerning holding limits. Maybe, yeah, the question about costs and let's say compensation model is one of the most complicated what is left. I will stop here. Thank you.
Thank you very much, Veiko. And last but not least, I will turn to Evaldas, and my question to you goes as follows. Let us consider how the Digital Euro project can deliver on the expectations raised. What role do you see for the Digital Euro in enhancing the resilience of the financial system, supporting crisis management, and strengthening trust in banks by providing an alternative digital means of payment in the event of disruptions, ranging from technical glitches to hybrid attacks?
Yeah, thank you. Thank you for the question. And to be honest, I think the question has been answered already multiple times today, because this resilient topic is coming up many times on different speeches and panels here. Nevertheless, I would like to offer a bit different perspective probably on resilience. If I take back the very general questions, what is a resilient system, right, as such? So resilient system is the one which ensures that money flows in the society no matter what happens. No matter is it a cyber attack, is it a power outage or any other adverse event, still the money is flowing in the society, right? So that's the key goal of the resilient system. And when we are looking more broadly how the resilient systems are being built, so in general, probably IT companies are the best in building resilient systems of their own, right? And the basic principle, the way they build those resilient systems is they build one infrastructure, and then they have the backup infrastructures. When the first infrastructure fails, or one of the infrastructures, the main infrastructure, is failing, there is usually a seamless switch to a different infrastructure, right? So that's the basic principle of it. And what we should do, in principle, in the financial system, we should also build a similar approach, similar system. When one infrastructure is failing, we should have the possibility for people, for businesses, to switch to a different infrastructure as such. And this is exactly what Digital Euro is bringing. It's being built on a different infrastructure. It means how my colleagues were saying that additional features are being built but they are still being built on the same infrastructure, right? No matter how resilient one infrastructure is, if there is no alternative, the whole system as such is not as resilient as it could be. So that's my main argument. What I also hear is that cash is that alternative, right? But what we tend to forget that currently, especially here in the Baltics, access to cash is also completely dependent on international card schemes, right? When my colleague Marius was sitting here and saying that when the war started, there was a lack of cash and the ATMs were filled in. Nevertheless, we tend to forget that the access to those ATMs, again, was built on exactly the same infrastructure. So if that infrastructure fails, we don't have even an alternative to access cash. Only that little amount which is available in the drawers is available for the population, right? Which, in my deep belief, is really not enough to keep the system up and running, to keep the system flowing, right? So yeah, so the thing is that the way I see it is that Digital Euro, even without any single additional feature, which we discussed, and Veiko just told those additional features, even just bringing a separate infrastructure already builds a lot of resilience into the system as a whole. And that is an important point which we tend to forget, that we are talking about features. Will it be from day one, day two, how it will be implemented? They are all very important features. But the most important thing is that Digital Euro brings an alternative infrastructure. When one fails, people can switch to alternative one. So that's the main point. But of course, I don't want to diminish the value of those alternative features, which is offline functionality and switching possibilities. So those are, of course, very important, and they add a different layer of quality to the resilience as such, right? So of course, there was a lot of talk about it. I really don't want to dive deeper into those functionalities, but they just add additional features to the resilient system which Digital Euro is building by itself already in the finance. Nevertheless, there is one more important aspect of building a resilient system. So we are talking a lot about the features, how it will be built, but the key thing is that is the usage of digital euro in the society. Because if, let's say, less than 1% will be using digital euro after it is launched, right? So can we call it really, what will we do? We will start onboarding customers when the power outage is there, or when the war starts, or when the cyber attack starts. Probably that's not viable solutions to start onboarding customers, going through all the procedures, right? So the usage is also very important part of the resilient system as such. We cannot say that we have a resilient system just because we have a theoretical and practical alternative which can be implemented in, let's say, a few weeks' time. It can be distributed in the society. Society has to already get used to this means of payment. They have to start trusting it, and that's why the distribution itself, the usage of digital euro, is equally as important as all the features that there will be on digital euro. So I think all these aspects are really important on how to build this resilient system, resilient payment system, resilient financial system. And yeah, thank you for that.
Thank you very much, Evaldas. Before I go to the next round of questions, my question is to you, distinguished panelists, all four of you, whether you picked up on something that your colleague to your left or to your right just said that you would love to build on, and if so, indicate with raising a hand, please. If not, I will continue, and I love doing monologues, but one thing that immediately popped to mind to me when listening to you all was the whole focus on when the sort of the internet is down. That era or that specific niche is covered very well by all of you four. That what to do then if we can't access it simply. Well, that's one possible spectrum of the hybrid attacks that we see now in Europe, but the other one is that simply the financial institution has not done their homework well enough, and that their technical systems are not up to the level that they should be in 2025. Their investments to that field are not sufficient. They don't have a sufficient information security team. They don't have, or they might have plans in place what to do, but they have not tested them in real time to see if the alternatives actually function. I mean, me personally, I've been in at least 3 times during the last 12 months in a shop, in a grocery store, tried to pay for my groceries, and it's impossible because the systems are down. Then I take my other bank card from another bank, same problem. And so that has nothing to do with the fact that the bank has or does not have internet. It has a lot to do with the fact that cyber criminals and cybercrime being the 3rd largest economy on planet Earth, and they invest in this day in, day out, and with the difference from the banks, they work 24/7. Their staff is functioning every day, every night. There are no borders. So this is my question. How does the digital euro help us? How do these new initiatives that you have thought of, which I commend you, and it definitely does help with resilience, but I'll go in the same direction. So if you can build on this shortly, and then I go to the follow-up questions. So Uldis, please.
Yes, well, thank you, Gert. I think excellent example. In fact, if one thinks, as a scientist, one immediately considers that, there's a total alignment of interests. The banks should be totally interested in protecting their customers against fraud. And why is then there a problem? Where is the market failure? And market failure perhaps is then in the question that those investments might not be sufficient. And for that reason, of course, we have the first line of defense is always the bank's management. They are people who are mandated by their shareholders to ensure that they meet their customers' expectations and demands in all situations, and that they have robust systems. Now, what if that fails? Then you have the supervisory board. They bring additional perspectives. And then, of course, we have European Central Bank, which is responsible for supervision. It is the direct responsibility of the ECB through the SREP process, through the assessment to make sure that the management of all risks, including operational risks and cyber risks, is done up to the standard. And if not, there are plenty of possibilities. As a former supervisor in 3 countries, I can assure you that there are plenty of mechanisms that supervisors can use to intervene in such situations. Now, how the digital euro would change that situation, I would say we need to be aware that, of course, it will add complexity. It will undoubtedly add complexity to the situation that we currently have, but it doesn't take away those basic things. The need to ensure that banks can, under all circumstances, provide services to their customers, not let them down, and making appropriate investments in people, technology, and processes to ensure that they are robust and function under normal times and also during crisis.
Thank you, Ilze. Same question, but with extra caveat. You talked about cash and how that helps, and you talked about the examples that Latvia has done in making sure that these ATMs function, that the circulation is there. My question to you is, what will people do next? I mean, if everything is down, they take the cash, they go to the shop. Does every shop in Latvia accept the payment, write it down on paper if the Kassa system is down? If they can't digitally enter any of those purchases, how can these people then use this cash? But the original question as well, sorry to make it complex for you.
At first, just to follow a bit up on what Uldis just mentioned regarding the contingency planning, we have also for critical financial services, we have created like additional contingency planning and also additional regular testing for that. We do annual tests, and then but we always start with scenarios, and this is coming back to your amended question that it depends, of course, on scenarios. So every solution, every preparedness solutions crisis solutions depend on what we look at. So those critical financial services are made for rather severe scenarios, and of course so it means that for the readiness of the merchants, we still have some work to do in Latvia. We have introduced those solutions with the merchants who were ready and who are covered the most part of specific areas like food, fuel, and medicine. But we have still way to go, of course, and this is a valid question that merchants should do their homework as well.
Let's leave the host country last and turn to Lithuania first.
So answering your question on the cash itself, just adding to that. So of course, financial system cannot ensure that the country in general is operating, right, as such. So that's financial system can do as much as possible. So if the doors of the shop is not opening because they are electronic and there is no possibility to open it manually, there is so much that financial system can do, right, if the customer cannot enter the shop. Nevertheless, our responsibility is to ensure that the financial system works well when all the other factors are working also. And at least in Lithuania, so all the sectors are preparing. It's not only that financial system is being prepared, it's all the sectors. The shops are being prepared for those scenarios. The supply chains are being prepared for such scenarios. So it's not only about the financial system, it's much wider than that.
From my perspective, and sorry to again bring you to security, but that's just I live and breathe cybersecurity day in and day out. The financial sector is actually doing quite well if I compare it to other sectors. You have had these regulations, you have had ECB, you have now DORA, you have had all these rules that you've had to follow. But guess what? You are the financial sector. That's where the interest lies, because again, cybercrime being the 3rd largest economy on planet Earth, I keep telling my 2 sons at home day in and day out that study hard, then you will succeed in life. Well, there's a large part of societies on planet Earth, of groups of people who don't do this, who don't go to work, who never wear a tie and still manage to live their life through cybercrime, and financial sector being one of the main targets of them because simply you circulate the finances. But Veiko, sorry for this curveball in the beginning, but same thoughts, same question. Any reactions to your colleagues?
Yeah, a lot already was answered by previous Uldis, and yeah, usually when we're speaking about why banks or financial service providers are not ready to provide services on the level which is expected and which is resilient, let's say, it's a question about let's say, regulation, supervision, and competition. Let's say this is something which should be, let's say, used. But which concerns digital euro, and already before there was a message that probably Uldis referred that what is message of our, let's say, of the government or let's say central bank to the people using payment services, that you have to have 1 week cash use. You should have at least 2 different cards providers. But then, when we have a digital euro, we probably will have, our recommendation will be you should have a cash, but you will have 1 digital euro, let's say, card, because you can switch easily between providers. So it means this is a different, let's say, story. And this was your question about what will be different in case of digital euro. This is something which will be different.
Thank you very much. I have a question to Uldis. Are there any relevant lessons learned from countries that are more advanced in the introduction of CBDC from resilience and preparedness perspective?
Well, I think the paradox here is that countries which are more advanced in the introduction of the digital euro are probably in the developing world. They either are quite small economies which have already introduced central bank digital currency, or they are quite big economies like China and India which are experimenting on a large scale. And I think a couple of things. First, I think it's important for us in Europe to be very clear about what objectives we want to achieve. And it seems that in Europe, our primary objectives are slightly different from those in other countries which have probably been more advanced. Maybe financial inclusion is important, but not that important. I think when it comes to innovation, yes, an objective, but not maybe the objective. So what are then important things in Europe? And I think we come back to this question about sovereign autonomy, and from that perspective, it is very important that when we design those objectives, these objectives come first, then come the features of digital euro, which we want to see, and then come the cost. I think one item that we have not discussed here is the cost. I think it has been mentioned that there are studies, and I think PwC has done a recent study estimating that the only implementation of digital euro, and only in relation to banks, not in relation to merchants and everybody else in ECB, can cost up to 18 billion euros. This is a private sector estimate, so I think from that perspective it would be very good to see public sector estimates, and in general I would say more transparency about the impact assessment. And from that perspective, of course, you can think in terms of different functionalities which are being discussed, but my point is that these different functionalities cannot be discussed irrespective of the price consequences. So when you discuss what kind of features you want to have for your own central bank digital currency, you have to think both about the features and the cost not only to ECB or to merchants, but also cost to banks, cost to other users, because ultimately there will be a cost. So the fact that your purchase will be free of charge for the customer doesn't mean that there are not going to be any costs. And finally, I would just want to make another remark that what has been mentioned earlier about discussions about the impact on financial stability. It is very important. It's very important to see this not as a static game, but as a dynamic game. Because of course, it's very important to see how this maximum holding limit is designed. And of course, there have been studies that have shown anything in between 5 to 10% of deposit loss, but these are very uncertain estimates. But of course, in addition to that, the banking system will be affected through also potential loss of revenues, depending on different scenarios. So having a robust impact assessment, and also thinking about the political dynamics, because we are now all in agreement that digital euro will not bear interest. And of course, that's an important feature to ensure there are no negative short-term impacts on the banking structure as we know it, that we don't destroy the banking system by doing it. But then think about later, what happens if the regulation is adopted, if the decision to introduce digital euro is adopted, everything is going on, and then suddenly you have a populist party which says, why don't we pay interest on digital euro? It's good for people, And so these type of scenarios, I think, should be taken very seriously at the outset, because this is a dynamic process. So that would be my invitation also to be ready to think about the worst case scenarios, because I still remember that morning when I woke up after Brexit, and I thought this could never happen, and this happened. So be very thorough with impact assessments. Thank you.
Thanks to Ilze. In a crisis, how can the digital euro reinforce Europe's independence in critical payments?
Yes, I think this issue has been covered during the whole first part of today. So just to sum up, that digital euro would strengthen Europe's strategic autonomy. It would really reduce reliance on external providers. It will provide crisis-proof complement to cash and current digital payments. So together, these elements make Europe's payment system more resilient, more independent, and ultimately more prepared for the unexpected. But to finish the answer on the more philosophical note, I'm very much interested into the development of historical development of central banks, and we all, or at least most of us who come from the central banking part, know that the reasons why the central banks were created, and so it was to ensure money unified, stabilized, to unify and stabilize fragmented systems. So basically, if we look at the large-scale digital euro, can also be seen as the next step in ensuring monetary unity, sovereignty, and trust in digital environment and digital economy. So this is just to draw lessons from the 17th till 19th century.
Thank you, Ilze. To Evaldas, are existing offline card payment solutions sufficient for crisis scenarios, and what added value would an offline digital euro bring, and why is it needed from the beginning?
Yeah, so offline solution is an important step and in the very right direction, right? So it adds resilience to the current means of payment. But as I said in my first intervention, nevertheless, it strengthens or makes more resilient one type of infrastructure, right? When we look, and it's important, of course, it's very important to strengthen as much as possible the currently available infrastructure to make it more as resilient as possible. Nevertheless, the resilience of financial system as a whole cannot be achieved by such small steps improving just one infrastructure. That's why we argue that additional infrastructure with digital euro is needed when you look from the financial system point of view, not from the certain infrastructure point of view. So as I said, it's a good step we encourage, but again, it has also those features which are limiting the usage of that. And I believe in Lithuania the usage is mostly limited because, for example, it is applicable only in a specific legal environment when a state is more or less in a pre-war condition already, right? So only in those cases offline solutions would be available to the society. So it's really limited in usage, and again, it will be limited to certain types of goods and services, to certain shops. So it's quite a narrow in its implementation itself. So yeah, just to emphasize, it's a good step in improvement, but it doesn't change the whole resilience of the system itself much.
Thanks. My last question of the day to Veiko. Where should the line be drawn between the responsibility of private providers and the role of the Eurosystem and public sector in ensuring resilience and crisis preparedness?
Yeah, thank you. Basically, I try to be short to leave room for questions, but it's ordinary situation. Public sector is responsible for regulation, supervision, coordination of vital services provision, and for national emergency solutions. This is the role of the public sector. All the rest relies on the private sector. And what is important to understand that Digital Euro project is not a public project, it's a partnership project. Public and private sector is providing this solution together in partnership. And this is very important to keep in mind. And I want to refer what Uldis said about the cost and possible estimations that we cannot estimate the cost taking into account that these are from the scratch, from the zero point of view. We should assess how the different solutions exist together, where is interoperability, where is the synergies between, let's say, solutions. And this is, when we're speaking about the costs, this should be taken into account. Without that, the picture is misleading. Thank you.
Thank you. So now the audience, please. Any questions? Start here in the front. Can we have a microphone?
Hi, thank you for a very, very interesting discussion. My name is Chris Crespo from Nordic FinTech magazine. Earlier this year, I had the opportunity to interview Alexei Shaban, Deputy Governor of the Bank of Ukraine. And given the fact that a lot of the risks and the scenarios that we're discussing here in this panel are the ones that Ukraine has already experienced, my question to you is, what can Europe learn from the response that Ukraine has had with things like power banking, migration to cloud infrastructure, local power supplies, that could help in a situation like the one that we're describing between now and when a potential digital euro be available?
Uldis first, and then Veiko wanted to add.
Very briefly, so first of all, it is really a unique achievement by Ukraine to have its financial system running in these extremely difficult circumstances, so they should be praised for all they are doing. I think I would want to emphasize very shortly three things. One is the importance of working extremely closely between the central banks and commercial banks and other infrastructure providers on finding common solutions. And I think that is highly relevant, especially to this stage when many crucial design features of digital euro are being discussed. It's important that there is a very close dialogue. That's number one. Number two, I think active dialogue with existing payment providers, including non-European card networks, has been very crucial to ensure financial services function successfully in Europe today. So the cooperation by VISA and Mastercard has been extremely important, and my understanding is it has worked well. And maybe the third point is importance of ensuring different kind of redundancy solutions, including cloud. And I think there, Europe can learn a lot from Ukraine. Thank you.
Thanks. I don't know, was it Evaldas or Veiko who wanted to add?
Evaldas.
Evaldas, please.
Just to add up, not to repeat what Uldis was saying, of course we're drawing up from the lessons from Ukraine, and what they are saying that one of the most important lessons was the short-term disruptions in the network, in the communications, right? So that was the key. It was not like all the system is down for a week, let's say, or so, but for an hour, for half a day. So these disruptions are quite common in such cases, and that's exactly why those two functionalities, we can say the offline functionality of digital euro is of the primary importance, and offline functionality in card networks, which is being built now. They both address the same key vulnerability. That is exactly drawn from the experience from Bank of Ukraine.
Thanks. Final question, because we're running out of time, from the gentleman here.
I'll try to Be quick. So the panel has brought up the question about financial inclusion and that some countries, for example, African countries, have this problem and they're introducing CBDC for that reason. But I believe that we also have this problem in Europe, probably to a smaller extent, but we have some countries like Italy, for example, 3% of people without a bank account, and also with Bulgaria joining the Eurozone soon, where also a significant amount of unbanked population lives. So I wanted to ask, like, how can the private and public sector there collaborate also to plug this inclusion gap, potentially with the digital euro?
Any reactions?
Yeah, we probably don't have a huge problem with inclusion here in the Baltics, right? There are very little percentage of people who are unbanked as such, right? So that's why it's hard to react for us to the issue itself. But nonetheless, if it is the question of trust, right? Why the trust in banking system as such? So digital euro will address that topic because it builds on the public money. It builds not on a commercial banking system, but on a central bank money. So that if really the inclusion is the problem of trust, so that's how digital euro should address it.
So Ilze followed by Uldis.
Yeah, just to continue that at least in Latvia, there are at least the young generation uses internet like 99.something%, and more than 90% use digital banking on every day, so there is doesn't seem the problem for the future, but of course the digital euro solves the financial inclusion problem as well, because there are different functionalities and different approaches there embedded in the solutions.
Yeah, I just wanted to clarify that we do have a problem of financial inclusion in the Baltics, of course, and in Europe in general. Even in digitalized societies, we still have elderly people and who sometimes expose themselves to cyber risk because they often even ask their relatives to help with internet banking, and we know how it works in practice. But also we have, I would say, a quite close link between financial inclusion and financial literacy, because when we come to more complex products, I'm not sure that all people understand them. We recently talked about that the European strategic autonomy is not only challenged by potential, US tech actors and other central bank digital currencies, but also by stable coins. And how many people understand how stable coins work? Okay, or how the new EU regulation for digital assets, MiCAs, operate in practice. I'm not sure that this percentage is quite big. So from that perspective, yes, inclusion should always be high on the agenda, even if it may be not the primary kind of highest level objective. It still is an important objective.
So now 15 seconds from each. Most urgent action needed next, starting with Veiko.
The most needed action is just to let's pass this regulation. What concerns important things here in our countries and Europe also then is a full implementation of DORA. And of course, we continue with our, let's say, our own measures what concerns offline card payments and other things which is already in place here.
Thank you, Evaldas.
So we already said the most important one. This is to make the decisions. But after that, I would see that the next one is to start a deep engagement between central banks and commercial banks and fintechs in order to dig deeper in how we are going to make it happen, how we're going to make it live. And this engagement will be key between the market players.
Thank you. Ilze, please.
So on more general note about the societal resilience and preparedness, which is one of the issues I'm currently working on, I would say that at least on my table, the most crucial issue is to kind of codify or structure minimal national baselines for crisis readiness, and yeah.
And Uldis?
Yeah. Very shortly, I think digital euro is not a panacea for resilience. We need to continue working on all other things we can do to strengthen our resilience. Secondly, what happens between now and December is important. If we can reach political agreement on digital euro, that's something that industry would be very interested to know. And of course, industry would be ready and very keen to participate in those discussions up to December, because many of those choices which were mentioned that still need to be made about design of digital euro are quite important. So involving private sector in those discussions can only improve the quality of the outcome. Thank you.
Thank you very much, and sorry for stealing 3 minutes of your lunch.